Okay, we're back. Good morning. Good afternoon. Hey Linley, good afternoon, how you doing? Hey Angel Case. Hey Judy, how you doing? Hope you're all well, doing great. We'll give it a couple of minutes before we get started. If you can see me okay, hear me all right, put it into the chat, let me know. Two minutes or 1 minute and we shall get started. Hey Mark, how you doing? Hey Diana, welcome back. Long time no see. Oh, good. Thank you for that. Thanks, Linley. Thanks, Mark. In the meantime, while we're giving that 1 minute or just about to start, if you can help me out, do remember to click that like and subscribe button on YouTube, the little rocket ship button on TradingView, and the thumbs up button on Facebook and on LinkedIn as well. Hey Jimmy, how you doing? Diana's been busy with trades. I think hope you've been trading well. Okay, let's get started. So again, for everyone who is watching us for the first couple of times, or the first time or first couple of times, big welcome to the daily market analysis. Thank you for joining me. The link is there for the Discord channel. If you haven't joined us already, do drop a message, say hi, let me know where you're joining us from. And for all the regulars, a big welcome back. Thank you for joining me on this daily market analysis as your regular routine for a lot of you as you start your trading day. If you have any questions at any point in time, any particular trade you'd like me to look at, please feel free to put it into the chat and let me know. With that, a quick disclaimer: any information contained on this webinar should not be construed as advice and is presented as educational material. The contents of this webinar are not intended to be a recommendation to trade a financial product, and your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. Have to get that done, and let's get to it. Good morning, Jew Mariners. How are you doing? Hey, Pips Apprentice. Hope you're well. Just want to make sure that it's streaming across. Everything is working well. Okay, good. Let's keep going. Hey, Daily Gaming. Good morning. So, before we do the usual and get into the news of what has happened since the last time we spoke, just wanted to show you a quick review of what has happened so far. Look at gold. Gold set right across H1 time frame. It dropped on Tuesday, like we spoke about, and then through yesterday, it just set in that really tight consolidation. Right, relatively tight consolidation between 1987 to 1995. So it's just been sitting there, and that was pretty much the sentiment or price action or volatility that we saw right across the board. USCAD through Wednesday, or since we spoke, sitting right across. US Swiss franc pushed down a little bit, but only started to really show that downside, a little bit more of that downside early today, but over yesterday, sitting right across. Euro dollar came down, bounced back up a little bit, almost had our trigger to enter, but bounced back up. Pound, dollar dropped, retraced a little bit, and then now looking like it might show. So it's what we spoke about, right? I said it was going to come down to this support level and bounce around. It did not drop as much, but it just continued bouncing. This move to the downside from 1.2569 down to 1.2547, now retracing, is because of the GDP number that was just released. It was 0.3%, was expected to be a minus 0.2%. It got released at a minus 0.1%. So GDP for the UK less than previous month to month, and not as bad as market analysts was expecting at minus 0.2%. That's why we saw the pound, or we're seeing the pound dollar push down, but not a huge drop because it's not as bad as expected. The US yen was a trade that I got into quickly, in and out. I did get in when it broke that 150.60 level, thinking that great, it was going to continue to the upside. It pushed up about 15 pips, right? It pushed up by about 15, and you see that it came to about that point, that area here, and it failed to break higher. I got out at about 10, right? So that was something I watched very closely. I got about 10 pips, and that was it on the US yen. Take that away. And then the Aussie dollar rebounded. Daily Gaming was saying that gold bought 1987 to 2010. Super. Aussie dollar, well, we were looking for that downside, didn't. It's looking at the sitting right across right now, pushing back up a little bit. Kiwi, we were looking for that test and rebound and rejection to the downside. Did not hit, sitting right across. So you can see that's why I showed you the gold first off, where it was sitting right across. So it didn't do anything, and that's why we were seeing right across the board on the other major currency pairs. Daily Gaming said he bought gold from 1987. So right there, it didn't get to 210, to 2010. So you might be holding on to it, I think. Yeah, it didn't get to 2010, got as high as 1996.17. Okay. Then a dollar index retracing. So, there were two views. Either it's going to break to the upside from there, right? Dollar index, after we finished our session, came up, tested that high, formed a bit of a double top on that interim resistance, and then pushed back down. So I am still looking for this potential move of the dollar index coming down to test this support. Has to stay above this support of 104.50. If it stays above this, then I could anticipate a push to the upside, but if not, then we could be looking at it returning back into that range. Then, now back to the usual service. Since the last time we spoke, sorry, let me just get through the messages. Hey Goju, how are you doing? Hey Erwin, good morning. Diana's asking, do you know you can connect IC markets with TradingView? I haven't tried that. Yeah, I haven't tried that yet. So if you have a way, let me know. But yeah, I haven't tried that. I don't think it was possible from the last time I checked. Okay, so since the last time we spoke, no big news. I think most market analysts, most traders were off celebrating Valentine's Day, and that's why we saw markets sitting right across, only coming back to life today, or early today. Early this morning, we did have the Aussie employment numbers, right? We did have the Aussie employment numbers, employment change. It was very bad employment numbers, worse than expected employment numbers, because employment change was minus 65.1, minus 65.1k, revised down to minus 62.7. Forecasted 26.4, came out at a 0.5k employment change. Right? Employment change is the number of employed people during the change in the number of employed people during the previous month. So it's only a small increase there on employment change for the Aussies, with unemployment rate going from 3.9, expected 4, got released at 4.1, right? And that's why we saw that move, that candle. I'll take this away for now. That's why we saw this candle push to the downside on the Aussie following the release of the news. So came down to around this area, around this consolidation area, and then pushed back up a little bit. And my throat's killing me. Okay. The Chinese are still on a bank holiday because of the Lunar New Year. While we just spoke about this, the pound with the GDP number, again, was 0.3, revised down to 0.2, expected minus 0.2, came out at a minus 0.1. Looking at whether it's continual impact on the pound dollar, looks the same, possibly pushing to the downside to find that support. But we'll go into a bit more details of that shortly on. Then, through that, not much else. I mean, we just had all of that, but I don't pay attention too much to these news events. President Lagarde speaking from the ECB at 4 p.m. GMT plus 8, due to testify before the Committee on Economic and Monetary Affairs. I don't think this will be the big price mover that we're looking for. I think the volatility, right, there's a lot of consolidation right now. The volatility is likely to come back in later tonight, 9:30 p.m. GMT plus 8, where we have the US with their retail sales number. Retail sales month to month was 0.6%, expected minus 0.2%. So if it does come out at that minus 0.2%, or I'm thinking minus 0.2. I'm just thinking whether it will be worse than expected. No, I think that maybe even a minus 0.1 might come around. Okay, with core retail sales going from 0.4 to 0.2. So I'm thinking that we might have a bit of a mixed number here for the retail sales number for the US. So maybe a bit of a green number here at minus 0.1, because I'm thinking about why I think it might be minus 0.1. I'm thinking about this number here. CPI, right, 3.4 to 3.1, showing some inflation growth, might be the reason of a bit of an increase in demand, might be the reason why we could see retail sales number going to minus 0.1. Maybe not as bad as expected. Okay, and then core retail sales excludes automobiles, looking to go from from 0.4 to 0.2. I think it will be quite similar at 0.2, maybe a bit of an increase as well, 0.3. Okay, so I think that we might see a bit of a mixed number here, mixed as in not as expected, which could bring some upside to the dollar index. All right, that's what I'm watching out for here. And then through to tomorrow, bank holiday in China, Chinese markets, we have retail sales number for the UK and PPI and core PPI for the US, which I'll tell you about during tomorrow's session. So now looking at the charts on the dollar index. Okay, Weeboo's on it too. Interesting. Hey, good morning, Jamil. How are you doing? So now, looking at the dollar index, like I was saying, the main thing I'm looking for is that it needs to stay above 104.50 or even that level at, well, 104.47, so 104.50. Needs to stay above that point to remain bullish for that rebound. Let me check. Let me have a look where 38.2 is, right down there. Okay. So if I zoom out or squeeze it down a little bit, you see that this is what happened. This is quite similar. This looks, tell me again if this looks quite similar to you, where we're seeing this move on the dollar index. So it went up, passed lower, went up, went lower, and then set across and pushed up, right? Pushed up to that point. I'm not messing my chart up a bit. So if we're looking at this, okay, I'll do that again. If you look at this, pushed up, tested, and then set across, right, for pushing up. And if I did that and just move this right across, you see that it could look quite similar. All right, I know I'm messing it up a little bit, but it does look a little bit similar where it's pushed up, pushed down a little bit, tested again, and now looking like it might test below this support around this area here before possibly pushing back up, especially if we see a slightly stronger than expected retail sales number. Okay, so today being the 15th, dollar index needs to stay above, it does still need to stay above 104.50, right? And then what we're looking for here will be needs to stay above 104.50 to, I would say, I'll give it a bit of a range, 104.40 to 104.50. Good retail sales data could see bounce. Okay, to what are we looking for? Possibly 105.40. There we go. Mark, it's like a Picasso chart. Yeah, you need to squint and tilt your head a little bit to make sense of it. But yeah. Okay, so what I'm looking for is that it needs to stay above this area. And then we're looking for that bounce back up towards this 105.40 level, right? On good retail sales, especially on good retail sales data. So now with that, 104.40 is about that point there. We might still be seeing a little bit of a downside on the dollar index before looking at it bouncing back up. So if we look at the charts, Jamil says he's selling pound. Yes, that, I would say that makes sense. Overall, we're still looking for a bounce and a push back up on the dollar index. So I would maintain this view on the Kiwi. Take that away for now. No, wait, sorry. I'll maintain this view on the Kiwi, but what I would be looking for is it needs, instead of being that high up, it needs to break below this area of consolidation. We're done with this. I want to move this right across to that point, right? We don't need this fib level. Okay, still keep this because it held 38.2. Okay, so we're looking at that. We're looking for it to break out of this consolidation. So 0.6073. You could even do, yeah, 6073. Stop loss 20 pips. Take profit down to 60 pips towards the support level with the hesitation at 6045. So we maintain the idea that there could be a hesitation at 6045, and we're still looking to sell down from 6073, 20 to 60. 6073, stop loss 20, take profit 60 to the downside. Remember that we're expecting maybe a bit more, maybe something like that on the dollar index. So I wouldn't be surprised if it pushes up a bit more, but I wouldn't be looking to buy the Kiwi within this range, right? I'll be looking to sell it down. This will be a good place to do it. If not, then the alternative would be, I wouldn't do 50. 50 is too near. 61.8 would be good. And that would also look like it will come up, test that area, and then turn back down. So you could also be looking to sell down if it bounces to 61.8 and rejects. Okay, but general idea is looking for that selling opportunity on the Kiwi dollar. Then onto the Aussie. Drag that line down. So that line was formed from way back, 28th of December. We started, rejected, bounce, tested, rejected, and then again most recently on Monday and Tuesday, tested and rejected. Right now looking like it's going to bounce back up, or push back up a little bit with some dollar weakness before possibly turning back down again, right, with the support level down here. Now let me check this support. I'm happy with that. We could even consider this point here, right? So for this area here and this area here. So now looking at this, I want to put an interim level about there as well. Okay. What I would be looking out for here on the Aussie would be if it tests this resistance, the trend line resistance, and pushes back down. You can be looking to sell down 6500, stop loss about 25. Take profit could go down to this point, which is about 50 to the downside, and then if it breaks this support, we're going to see further downside potential. If it breaks above this trend line, I know many of you would be tempted to buy it up, but I would say only if it breaks above 6540, then maybe we're going to see further upside, but we need to see the dollar index weaken quite significantly for that upside push. Okay, so this will still be my preferred setup. The alternate would be something like buying at 6555. Take profit again about 60 pips. Stop loss can be about 20 pips that way. Okay, but there's two options there. I still like that trending scenario. I'm a trend follower, so I want to see it test and reject that trend line to push to the downside. So 6500, 25 to 50 to the downside. we're looking to possibly sell at 0.65, stop loss 25, and take profit 50, with a take profit of 50. I would also put in, like what we did yesterday, the alternative would be to buy at 6555. Sorry, my nose is killing me now. 6555, 20 to 60. Buy at 0.6555, stop loss 20, take profit 60 to the upside. There you have two, the preferred setup and the alternative in case we see that dollar weakness scenario. We're seeing some push back down now, but don't rush into any trades at this point. We're still waiting for that move to develop. On to the US yen. Zoom in a little bit. So I did get into that on the 15, happy with that, got out. Did not do that, but look at this that we were drawing to come down to test this trend line and possibly push back up. I will still maintain that view, right? I'll still maintain the idea of that on a recovery of dollar strength. But if it pushes up, I just think that it's a bit risky to try and buy, just if you looked at that push up and you try and buy, say about 150.50, there are many levels here that it needs to cross, right? This was the high for today, this was the high for yesterday, and this was the high, or this was the high for yesterday, and it needs to cross this two highs to begin with a potential big move to the upside. So now let me think. 30 pip, 130. I don't see why it should move or could move 130. We have an interim level about there. Catch the middle of that, which is 151.40. Okay, so maybe something like this, 90 pips to the upside. I think that should be fair. Checking this, 61.8 is close, break above. Okay, I'll be happy with that. In fact, what I might do is 150.60, stop loss at 30 pips, take profit at 80 pips to the upside. So I wanted to break above that 61.8 retracement for this small move down. Well, it needs to stay. Firstly, it needs to stay above this. If it pushes lower, great. I think there'll be a better buying opportunity, right, at this level here. But we're looking for that push back up. If that dollar continues to weaken, then you could be looking at something like this as well, 60 pips, stop loss 30. What you're looking for is a test and rebound back up. Okay, it is a bit of a, look at the dollar again, it is pushing down, so there is going to be that retracement, right? Kiwi, Aussie, pound, euro, there is going to be a retracement before a possible continuation. And you all know I hate looking for that retracement, so it's waiting to see when is it going to be done with its retracement before looking to continue with the trend. On the US yen, I actually think now that the potential for this retracement, for a deeper retracement, could be quite significant. So if I take that one away, Now just thinking about this, looking for it to break. I don't really need this now. I'm looking for it to break that trend line on some dollar weakness, and if the dollar strength comes back into play, we'll look for that bounce. I'm happier with this. So a 30 pip stop, a 60 pip take, break that trend line. US yen, we're going to wait. We have to wait for retracement to complete. Then we're looking to buy from 149.72, 149.70 to 30 to 60. Okay, we do that one. Wait, where am I? 149.70. Stop loss 30. Take profit 60 to the upside. Hey Kalinzi, how you doing? Good morning. Hey OJ Mets, how you doing? Hey James Bond 57. I did WTI oil the other day. Would you do another one soon on? I will. I can do WTI if you are asking, if you require. So yeah, sure. Diana saying that US yen could go to 149.90 on the daily time frame fair value gap, and if that holds that area, it can go up 149.90, which is about there. I think that I see that gap there. I think that if it comes down to 149.90, the momentum is going to possibly push it down towards that area here and that 23.6, so that area there. That's what I'm looking for, to come down and bounce. But it does, it does need to break that trend line first. That's the first requirement, I would say. Okay, and it might take a bit of time. So today is a day of patience, I would say. Okay. Cal D. Bomb, good morning. I'm not a lord yet. I would love to be, but not yet. Okay. Then on to pound. We know that we had the GDP number for the UK at minus 0.1%, and that's why we saw the pound push down. I'll maintain this view that we would be looking for it to sit along that support. I'll be looking to sell it down 1.2510. I'll go a little bit higher. Stop loss 20. Take profit 50, 60 to the downside. Okay, so we're looking at, I'm sure Spiros is on the session, probably not saying anything, but there looks to be, I'll take that scribble away. Let me do that. Okay. And then we have this pattern as well. Okay, so we got that big push down, retrace, now breaking that trend line, breaking that small channel, looking for further downside. Jamil is selling pound, dollar down. It's a little bit early, I feel. It's not early, it's a bit aggressive, but I do think that yes, this would be an early entry to push down. I would prefer if you guys were selling down from the support lower. Okay, so 1.2510, 20 to 60 on the pound dollar. 1.2510, stop loss 20, take profit 60. And again, why I think that that's a little bit aggressive is because if the dollar index does push down further, then we're going to see this retrace back up briefly. That's why I want to see it break that support and act as a bit of a confirmation for further downside potential. And as Kalinzi is asking, we're looking at the euro here. The euro dropped, came very close to triggering that downside, but it bounced back up, now pushing. I don't need this area, I can take that away. Finding that resistance, now turned support. Happy with that. That would be my interim level here. And it's pushing back up. Okay, so again, looking at the news for the euro, we have coming up in 25 minutes the President Lagarde speaking, and then not a lot of euro news after that. Okay, not a lot of euro news after that. So what I'm thinking, and I'll try and look for that retracement level, or where it could retrace to. We know 23.6 is done. We know it's breaking 38.2. 50 and 61.8 is close. Okay. Let me think. We have our levels. I like these levels. I think that we could be looking at this point. All right, so this was Monday, this was Tuesday when it broke to the downside. Now if it retraces back up, that's what we'll be looking for. So take those away like that. So looking for it to push up, test and reject 1.0757 or 1.0760 to sell back down on a recovery of dollar strength. Thinking whether 50 could be a reasonable level as well. Maybe 7.5. Okay, no, I'll tell you what we do. We'll do that. We'll keep that level there. Looking for it to test and reject back down. Looking to sell at 1.0750. Stop loss tight, no more than 15 even. Because if it tests and reject, then I think big continuation to the downside with a take profit of about 50 pips back down. Right, if it breaks through this support level, then I'm quite happy to move this support level lower on the review tomorrow as well. Okay, so 1.0750. Looking to sell 1.0750. Stop loss 15, take profit 50. This would represent a very good risk to reward ratio to the sell on the downside. Okay. Yep. If it does not retrace as much, if it just sits right across, then look for it to break that support, and then you can be looking to sell it down. What it would look like in that scenario would be 1.0715. Stop loss again tight at 15. Take profit 15, 1:1. Better still, 1:, well, 15 to 50 to the downside. Daily Gaming says I'm in a sell from 1.0780. 1.0780 is up there. Should you hold on to it? Again, disclaimer applies, but I would have closed. I would have closed a lot earlier. I would not be in that position, in this position. But I think that if you're holding on to it, I would see how it reacts at this point. If it continues to push up a little bit more, I might close it out. I would think to close it out. But if it sits there, I think that we could see it sit cross before pushing back down. Okay, so I want to see what happens here on the euro. Hey Nev, how are you doing? Update on the pound Swiss franc from yesterday. Okay, we can do that as well. So I hope I answered your question there, Daily Gaming, on the euro. Kel the Bomb is asking about Kiwi Swiss franc. So we'll do a Swiss franc after we cover that one. Okay, then on to now the US Swiss franc. Okay, now onto the US Swiss franc pushing down. So if you guys probably heard it from yesterday, I was like, yes, the US Swiss franc could push up, but it's, you know, very unlikely. Wasn't very happy with that push to the upside. Now retracing back down. Why is it coming back down? Again, likely because of that dollar index to the downside. So that's pushing down. What we're possibly looking for is a reaction along 0.8810. So we're looking for a reaction along this point here. Can't draw a circle. A reaction along this point here, because if it breaks, then we're going to see downside, but that also means we're going to see big downside move. We're likely to see a big downside move on the dollar index. Okay, so that's a 61.8. That's actually well and truly broken, so we can take that one away. We have this level here. We have this resistance up here, there, and our interim. Okay. So what I want to see here on the US Swiss franc, maybe a bit of a push to the downside before bouncing back up. I absolutely do not like trying to guess where it's going to retrace to. See, that's my 50% as well. I know that there's a massive gap there, which has come in tapped, and that's why it's bounced back up. I think that what you want to do on the US Swiss franc, like I was saying yesterday as well, look for reaction at 8.89. Right now we're looking for reaction at 88.10. Okay, I think it's a bit of an indecision here. I want to see a reaction at 88.10. If it breaks down, yes, you know what to do. But I think the more likely scenario, if we do see that dollar strength come back into recovery, is for a push to the upside. And it's quite a key level as well, with the 50% Fib retracement level right there. You're most welcome there, Kalinzi. Okay, so maybe a bit more downside on the US Swiss franc before a bounce back up. And then, because you guys are asking, Diana says close partially. Yes, Jamil is in profit on the pound. Yes, it's pushing down. Look at that. We're looking for that push to the downside. What was it we're looking for? Okay, so first off, Kiwi Swiss. You guys are awesome at forcing me to look at new pairs. Kiwi Swiss franc. We saw the Swiss franc pushing down or sitting there. We saw the Kiwi. Well, hang on. We see the Kiwi now sitting right across. So again, on the Kiwi Swiss franc, we see it sitting right across. It looks a little bit toppish, right? With my resistance at about this point here. pushing back down. I do have an interim level at about, well, at about this point here. So if the Kiwi, which is now sitting in Kiwi dollar, which is now sitting in consolidation, pushes lower, then we're going to see this trade down. On the dollar strength scenario, we're going to see that push back up. I don't like, I'll be very cautious trying to buy it back up. Oh, I've got resistance up there somewhere. Okay. But it is more of the trend following scenario. And we have this guiding prices up. So what I would be thinking, what I think could happen is that the Kiwi Swiss franc, if it does break down because of that big upward trend, which you can see, if it does break down from this 5380 level and that trend line, we could see it come down towards 5345. But ultimately, what we're looking for would be buying opportunities back up. If it stays along this level, and we're looking for it to break above that resistance before buying back up again. Okay, so that's how I would look at it. No trade right now. Wait for it to either break that trend line and trade lower to bounce off the support, or to sit there in consolidation and break up from that resistance to trade higher. Okay, I hope I answered your question there, Kel D-Bomb. And because we looked at the pound dollar pushing down very strongly, Jamil is super happy, together with the US Swiss franc looking like sitting there and possibly pushing a little bit lower, or sitting right there. Then looking at the pound, I don't have it again, pound Swiss franc pushing down. So this was something that we spoke about yesterday, I think. All right, update from yesterday. Yes, so we saw that push down. This was from yesterday. It's done that exactly. It's come down to our support here, our interim level here at 1.1090. As it looks like it's going to break to the downside, just be careful. About 10 minutes to the hour close, it could be outside the Bollinger, or it's likely to be, most likely to be outside the Bollinger. Could bounce a little bit, but I would pretty much just do that and say, if it breaks below this area, we're going to see it come down towards this next area, which is the start of that move to the upside. Right, and I think that that's quite a likely scenario given the way the pound dollar is moving. So I hope that answers your question too, Nav. Diana's asking for US 100. Yes, we can do that. And unfortunately, CHF, JPY in indecisive mode right now. Okay, so we've done that one. Now let's look at Swiss yen. I see a question there on pound yen from OJ Mets. We can do that. Swiss yen, like you said, in a level of indecision at this 169 or just below 170. Right, so we did that already. Right, it's sitting right there. It's not doing too much. I wouldn't be too keen on this for now. US yen, look at it, look at that. It's found that trend line, it's pushing back up. We were talking about that opportunity as well. Right, we were looking at that on a 30. Did that on a 80 pips upside move. So on the where am I? Swiss yen, I would say only if it breaks above that point, which is 170 dot, maybe I'll round it to 170.20. If it breaks above that point, then we're going to possibly see further upside towards 170.80, which would look something like that. So take profit with about 60 pips. Stop loss would be no more than 20, I would say. I'll want to keep it tight as it breaks out of that consolidation. Most welcome there, Nev. No problems. Okay, so yeah, Diana, Swiss yen is right in that area. Just something to be careful of. Pound yen, we were talking about this, either for it to bounce off this. Pound dollar is seeing massive downside. So with the anticipated, or with what we're seeing on the pound dollar to the downside, that's going to drag on the pound yen. You want to see a reaction at 188, right? So on the pound yen, what I wouldn't do anything right now because it is dropping. We want to see a reaction along 188. If it does break lower, then I think that you could even be looking at that point there. All right, to 187.20. So do nothing now. Look for it to come down towards that 188 level. If it breaks lower, then you can see a move to the downside this way, which would look like that 20 pips to 60 pips to the downside on the pound yen. Okay, OJ Mets, hope I answered your question there as well. Diana's asking, if news comes positive, how will it affect Swiss yen? As I noticed some correlation with the dollar index. Well, because the Swissy, the US Swiss franc, is highly correlated with the dollar index. So the news affecting the dollar index is going to be correlated to the Swiss dollar Swiss, which is going to therefore also impact the Swiss yen in a similar fashion. Right? Wait, hang on a second. This is a similar fashion. Dollar Swiss, if it pushes up, no, it's going to be a slightly inverted version because US Swiss franc pushing down is Swiss strength. Yeah, if this pushes down is Swiss franc strength, which will push this up. So it's going to be a slightly inverted correlation. Inverse correlation, not inverted, inverse correlation. Okay. Then I'll get to the US CAD in consolidation. Dollar looking like it's ready for its push up. Maybe not yet. So I don't think we're going to see that downside on the CAD. On the loonie, I want to see that support level hold, and if that support level holds, then we're looking at a buying opportunity. I don't see a huge move here. I don't see a huge move here, but you're looking at 1.3555, stop loss about 20 pips, take profit would be 70, and like I said, I don't see a big move here. I'm thinking maybe even at that point would be reasonable. You're looking at about 60 pip move to the upside. Okay, so US CAD 1.355, stop loss 20, take profit 60. US CAD, I don't want to see a sell, I want to buy 1.355, stop loss 20, take profit 60 to the upside. Then on to gold, sitting right across right now, anticipating that dollar strength recovery. I would still maintain that view that it needs to break below 1987 to push down. So I think that Daily Gaming was saying that he's trying to go for 2010. I'm not sure it'll get to 2010. It's sitting in that consolidation. If the dollar does push up, then we're going to see that push back down. Yep. If you look at gold on 2-hour time frame, see inverted flag and breakout. That's why I'm buying it to 210. Yeah, I was considering. I mean, I didn't see it on the 2-hour, but I was also considering that if it does break above this point, yes, we could see it higher. But I'm just thinking about the correlation between the dollar index and gold. So if it does push, if dollar index does recover, then we're going to see that push down. So that's why I think that a bit more downside potential with the dollar index showing some signs of a possible recovery. Okay, if it does bounce, if it does break out of 1996, we could even see 2014. Right, we could even see 2014, but yeah, so it's in that, because it's in that consolidation, you have that two options. I think more likely scenario is for that move down because of anticipating that dollar recovery. So break below 1987, you could see 1975, and then onto the US 100. We did that, right? We said retrace a bit before pushing up towards that resistance. It tested that, it consolidated before pushing up to that resistance. Now, I would say that, you know, with that support here and that resistance here at 18.010. Why is it not loading? Okay. With that point there, I would say that, yeah, most likely going to continue with that the move to the upside, especially with that forming the support to push it higher. All right, so most likely on the US 100 going to get to that resistance area that way. Okay, hope I answered your question there, Diana, on the US 100. You're most welcome there, OJ Meds. And any further questions? Okay, so if not, then please remember, do help me out massively. Click that like and subscribe button on whichever platform you're watching on. The link for the Discord channel is there again for you guys. Please remember, trade well, trade safe. Tomorrow is Friday, 16th. I will see you all tomorrow, same time, same place. Take care now. Bye-bye.